Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. U.S. economy is about to implode, and this is something the elite can see, as corporate insiders and investors like Warren Buffett has been a net seller of stocks and risky assets, and retails are getting the most bullish in the past 3 years. Buying every dip in sight.
Spreading like fire all throughout America, all throughout. And I saw Trump rising up. And then I saw an attempt on his life. This bullet flew by his ear and it came so close to his head that it busted his eardrum. And I saw he fell to his knees during this time frame and he started worshiping the Lord. He got radically born again during this time frame. And I saw him winning the presidency through great the Lord showed me it would go clear into the summer. Great persecution would come on him through the judges and through the law and all these people trying to sue him and all this stuff. But there would be a stop to it, and things would start to break free come toward the fall. And then I saw him winning the election through the Patriots coming out and voting, and then there will be a great economy crash. Yeah. I saw they had a great economy plan, a crash. Yeah. Worse than the Great Depression. And the Lord warned me about this. It would be a great dark time. But I saw paddles coming upon America's soil like a shocking of the soil. And I saw Donald Trump praying in the office of the Oval Office. And he was weeping before the Lord with his hands on his head like this, but he was weeping. The financial crisis of what I saw coming, it started to lift above the trees, and I saw the blue and the things coming back out, and the green times and the good times coming back again. But the Lord said it would be forth a time of a season of a shaking, and it would be a shaking to awaken. And in this, this would basically that he was not done with America. There would be a great revival come, and it's not all doom and gloom. That's what he said. The sky's not falling. There's a time of it's like people would say this is judgment, and the Lord said, "Do not call this judgment. It's not my judgment. It's a correction. There's correction coming."
And as you're about to see for this country, we are past the point of no return. I will show you why more companies in this sector are soon to follow. And will the political elites run to the rescue? Or is it far too late? I'll show you what their next move will be and why it won't make a difference. As U.S. manufacturing activity contracts for a 7th straight month, and this is dangerous news for the U.S. economy. At a time when investors are exceptionally bullish, they believe we're going to achieve a soft landing, and stocks are going to continue to roar. But yet, what we're seeing underneath in the U.S. economy is that we're about to implode. Because when you lose your manufacturing sector, as we're seeing what happened in China and in Germany, once that's gone, well, the rest of your economy is soon to follow. The Institute for Supply Management's factory gauge fell to 46.5 and has now been contracting, meaning a reading below 50, for every month except one in the past 2 years. And yet again, despite that bullish fever from Wall Street, is that everything is going to turn around as soon as the election is over. But when we look at the manufacturing sector, things continue to get worse. And that's a dangerous sign. Because at some point, if we don't see a turnaround, well, that means we're going to see mass layoffs in the manufacturing sector, and that will soon flow to the rest of the economy. Production activity has also dropped sharply in October at 46.2, making it the biggest monthly decline since April 2021. Perhaps the Wall Street's already priced in a complete Republican sweep. We're not seeing companies respond with any orders here, and what that means is layoffs are coming. and in a big way. Because when we look at capacity utilization, this is shown in blue. This is the percentage of a factory that's being utilized for production. So when you see a sharp drop in production, well, that means capacity utilization is going down. And when that happens, well, you start cutting hours. You start cutting heads because you don't need that many workers. If you don't have that many orders, and here you can see against the unemployment rate in red, as capacity utilization falls, the unemployment rate rises. And you'll notice this relationship, it's a near-mirror relationship, and it happens every time we head into a recession. You see a drop in capacity utilization, an equivalent rise in unemployment rate. Here we're seeing it now, not in the official data, of course. ISM is survey data, but showing a big plunge in production. That means capacity utilization is heading down. And any notion that we just saw the peak in unemployment rate, well, what it means is, from of course the labor market's perspective, things are about to get much worse. Now what we're hearing from inside the manufacturing sector, it's not due to the weather. It's due to demand, and that is a big problem. However, the uncertainty about the outcome of the U.S. presidential election is hindering investments in inventory and capital expenditures as companies wait to see what economic policies will be enacted. Now, granted that some of that is true, but broadly speaking has nothing to do with the election in terms of inventories. Because when you think about inventories, why do companies build up inventories? Because they think they're going to sell it. And if they're not moving product, well, what do you not need? Well, you don't need inventories. As this next chart proves, when we see advanced retail sales, less of consumer price index, or what's called real retail sales. That's in blue on a year-over-year rate of change, and we have that against retailers' inventories. And I want you to see what's really gone on here, because over the last 2 years, we already know that real retail sales have been largely negative, and that, of course, has an impact on the manufacturing sector. But look at what happened with inventories despite the fact that real retail sales went negative. We saw inventories come down, and now all of a sudden they're heading back up. And what that means is there's a lack of demand in the economy. So when we think about this from the consumer perspective, you see a lot of these articles, they look at it from the manufacturer side and start questioning, well, why aren't they building more products and more inventory? Well, it's because it has everything to do with the consumer and their spending. Because if consumers don't spend and spend all their money, the next thing you know, there's no need for any inventory. Because you see it rising, and if that's rising, well, then the orders at the manufacturing level go down. And that's the challenge here, is because the question we should be asking isn't what happens after the presidential election. The question is, will consumers come back and spend? And right now the indicator says not a chance. And we're probably going to stay in the slowdown period all the way through the end of this year. If we probably won't start to grow until January or February. Now the question is then, is what's changing in January or February? And based on the data, based on what we're seeing, I don't see anything that's changing. And that's the problem, because if you want consumers to spend, what they need is more income. Or they need to see their debt service costs and other expenses significantly drop. But if they're worried about losing their job and having no money, and their income is falling, you can bet they're not going to spend. When we look at real retail sales, again shown in blue, against average hourly earnings multiplied by average weekly hours of production of non-supervisory employees, we can go back heading into the dot-com bubble. And what do you see? A slowdown in real retail sales, despite the fact that incomes were rising. And then his income started to slow down. Well, then that was a foregone conclusion, because that sent us right into a recession, the global financial crisis. You see something similar now, where real retail sales were just slightly positive. Right now they're negative. And look what happened. You saw incomes rising. They peaked, and then they started to decelerate. The problem was inflation was too high, and that meant consumers could not spend as much, and we headed right into a recession. Now let's see where we're looking over the past 2 years. And again, we talk about the factory sector, saying it's been in kind of this downward trend for 2 years. There's a good reason consumers are spending. And the idea here that, well, maybe something will change in January or February. Well, the change would have to be is this deceleration in total income would need to turn around. And right now, there's no indication, because if you continue to see capacity utilization at the factory level decline, well, that means there's going to be no demand for more workers. And those that are employed, well, they're not going to get any more hours, which means any more money. Those are two things you really need to see, because we come back to real retail sales, and now we're going to look at it against the unemployment rate that's shown in red. And it starts to become very clear that as retail sales decline and slow down, as you see here going into the dot-com bubble, what happens is the unemployment rate rises. So this is a function of not just the fact that retailers need fewer employees and wholesalers need fewer employees. It's all across the supply chain, all the way up to manufacturers. Less demand means less workers, and we see that happen again going into the global financial crisis. You see that long deceleration, and real retail sales eventually it impacts the labor market, and then next you know it spirals out of control. Today we hear from the Fed that says the unemployment rates peaked. We said that's not likely at all. Against the fact that real retail sales have been negative for the last 2 years, and it starts to make sense of what we're seeing in the factory sector. So unless this turns higher in a big way, what it means is the unemployment rate is about to make a big move to the upside. In factory, price pressures on materials and inputs returned last month, even after dipping in September. So this is a big problem for consumers. We already know they can't afford higher prices. And now what we are seeing at the factory level, prices are going up. You want to know why they're really not building inventory? Aside from the fact that they can't actually move the inventory that they have. At higher prices, they know there's even fewer buyers. So if you're going to build it, you better make sure someone is going to buy it. In this case, they already know demand isn't there. At higher prices,